Hey folks, it is Vic Noble here with a weekly trade example for you for the week ending July the 15th of 2011. I'm going to actually go over some support resistance today because I had a question from a guy named Mike I've known for quite a long time, and he asked me about actually what he said here. Could you discuss the best scenario on determining what may be considered primary and secondary support resistance in relation to the current price action? Because like there's swing highs and swing lows all over the place. Well, how do you use them, and what's important and what's not? So I'll talk about what I consider primary ones, and basically they're the ones that are on the higher time frame charts, the weeklies and the dailies. Those have more strength and more significance. When price hits them, you can really expect a reaction. I don't care if you're scalping, you're trading longer term, or you're trend trading or counter trend trading, wherever you're doing. These are very important levels to watch. They can really help your trading. And I'll just show you the kinds of levels that I would watch as you're marking off your charts. And don't get too hung up on this. It's just a bit of practice at it. I tend to like to use the bodies of the candles for my to put trend lines on, or to put support resistance. Now you could put them at the tops of these wicks here, like this. See up here? I just find that this is seems to be a little better place to watch for. However, keep in mind that anywhere from the body to the top of the wick is a zone. It's just a general zone where you can expect there to be a band of resistance, right? So this is one, and I'm going to make these thicker because I consider these primary, quite strong. If you move down a little bit down here, this level, I don't know, just right in here. I like this level here. Why? Because it's, prices reacted off this a lot. Look at these lows in here, how it bounced and bounced, finally went through, and it stopped here again in this general area. It bounced off it again here, all in here. It's just a level that I think is worth watching. This little low in here, you see this? This was actually another place where the body of the candle stopped right here. See, you can move it up a little bit maybe. And I'd keep an eye on this. This is what I would watch for during the daytime. Whoops, and see what happens there. So that's one to watch. Moving down here, this level, if you get right down into around in here somewhere. Anyway, I'm just again, these are sort of you can see what's happened here. This level down here was a pretty good support level back here and in here, and it was resistance right here. There's resistance right in here again. It broke through it, became support here. That's 58. It's very close to the figure of 5,800. Okay, and the figures, by the way, are really important ones to watch as well, especially when you see them being retested again. And then down to here. I mean, you're gonna, when you see a level like down in, in this area here, that should be pretty obvious, right? That should be some kind of a support level. Okay, now let's make these thick. Okay, so we know that these are primary levels. And we'll just keep it. Now what I want to do now is change time frames. I'll leave these lines right the way they are, and let's change now to a daily chart and see what these look like. How do they line up with what we're looking at here? Now, do you see that how you can see how things actually show up in a little more detail here on a daily chart? Let's just zoom this in a bit. Here's actually the last few days, this whole week's price action. We would have had this marked off in advance. See, we know, remember I said 158 the figure? Look at that bounce off of there. So, even if you're trend trading, why is it important to know these levels? Because probably there's going to be a bounce at these levels, so you want to take profits, you want to move stops, or whatever you're going to do. As price rolls up here again, maybe you might have had your level in here, because this was a support level in here. But this whole area between the weekly and the daily here is a place to expect there to be resistance. How would that have worked out? Pretty darn good. Right, this went up to 160. Actually, it went up to 161.91. 161.80, 88 was our level here. 80 level on the British pound is a significant level. That's kind of gets into pair personalities. We won't talk about that right now. But look at the bounce we're having off of here right now. If you go down to the, take an hourly chart, whatever you want to do, it's really important to watch these levels. Let's zoom this out and look at the levels that we've had marked on here, and how prices reacted around them. Little Noble entry down here, comes back up. Another recent Noble entry here, just before I started this recording. You could have sold this thing up in here with a very small risk if you are expecting this to be a resistance and for a price to head down. For example, you might have a fundamental viewpoint that the British pound is going to start to drop against the US dollar. Well, if that's the case, here's a perfect way to get into it right here. Okay, so now when you talk about secondary support resistance, these are the kind of levels right here. You see this was resistance here. Price hit it, bounced down, it went up above it, came back, and now it becomes support, right? So those, that would be considered more of a secondary level. The primary ones are these thick ones that come off of the mostly off of the weekly and the daily charts. Those are the ones that you want to watch. And when you zoom your charts out and you start looking at these other levels, you'll find that on hourly and other chart levels, like if you look at this here, this was support. When price hits it, it bounces down. You can get some pretty good moves out of these. They don't look like much, but if you're trading like scalping or intraday, they can provide really good opportunities, especially like this price right here. Just so you know, that was at the London close. Look at this move down here. Okay, so from 59.37, it goes down to as low as almost 59. So there's almost 37 pips in that trade right there. Okay, that's a pretty nice little scalp. So depending how you trade it, but I'm just making a point that these little levels here are significant, but they'd be secondary. You always want to pay attention to these primary ones because they have the most strength, and then the rest of your trading can kind of be structured around those levels, and then you can of course watch for things like market flow. Now we're getting into how do you want to what kind of a trader are you? Are you a trend trader? Are you a counter trend trader? It doesn't really matter. All of these levels here, let me get some of these lines off here now. All of these levels are ones to watch so that you have at least an idea, a bit of a game plan. Now I'm going to show you something else about this before we go here. This level, I mean, here's just getting into the more advanced now. When you see these drops like this, check the Fibonacci levels. From here down to here, let's get this right on the top here. Guess what that was? 38%. 38% following this run down. 38%, not just 38%, but 38% at a resistance level. That's significant. Price comes back up to here, that's going to be significant. 50%, that's another favor of the British pound, by the way. Okay, so watch if Fibonacci levels and pivots and things, especially Fib levels, match up with these price support resistance levels. Are very strong. I'll show you something else. From this low up to this high, guess where price came back? 38% to a level that we had already marked off before in advance, that we expect there to be a bounce. You see how you can use this stuff? So make sure you pay attention to all that. It really can make a difference in your trading. And I'll just zoom that back out. I was going to put this on a daily chart and show you that actually it doesn't matter, weekly, daily, it's all the same stuff. But from this big move all the way up from the bottom all the way up to the top, 38% right to this beautiful little area of support resistance that we had identified in advance. That's the key to it. Okay, and again, I was going to show you this one on the daily chart too. This move down, let me get that back on the top there, 38% to here again. Okay, so I hope that helps, guys. There's primary and there's secondary, but the primary ones are the higher time frame support resistance lines. Draw them in, see how they match up with other things like fibs, pivots, your fundamental viewpoint. Technical is one thing, but if you have a fundamental viewpoint on, that's fine. Let the technicals show you that you're right. Okay, don't try to outguess the market. If you're right, if you think this is going to go down and it's going up, then obviously you're wrong because the market's right, it's going up. So, but if it's hitting a resistance level and you have a fundamental viewpoint that it's going down, good opportunity to get a short in there and see what happens. Or other way around, if you think it's going up and you come to a support level, that's fine. If you don't really know and you want to just trade it around these levels, that's fine too. There's really good strategies for doing that. Big mouthful, huh? Okay, you guys, thanks so much. I hope that helps you. Have a great weekend, and I'll be back at the end of next week with another weekly trade example.